Alibaba, the value trap or the verdict? Goldman's conviction buy, surging Qwen LLM adoption, and Google-calibre AI hires fuel the bull case, while an unconfirmed earnings date, key talent departures, and persistent China risk keep the bear argument stubbornly alive. Bull case. Goldman's $186 target and the institutional accumulation thesis. The bullish case for Alibaba is anchored by one of the most credible institutional endorsements currently active in global equities. Goldman Sachs' conviction buy designation with a $186 price target is not a passive rating. It represents Goldman's highest confidence long recommendation, reserved for situations where the firm sees a structurally compelling risk reward asymmetry that the market has failed to fully price. Goldman is not alone in that conviction. Prominent investors, including Dan Lubb of Third Point, have been publicly accumulating positions, lending further weight to the argument that current price levels represent a rare window of opportunity in a deeply oversold name. For the bulls, the calculus is simple. A company generating significant cash flows, leading China's AI race, and trading at a fraction of comparable technology multiples is either a profound mispricing or the market is correct that China specific risk warrants a permanent discount. The discount at which Baba trades relative to its fundamental value is no longer a nuance, it is the entire argument. Goldman's conviction call simply makes explicit what patient investors have been quietly building. AI strategy. QN, Google hires, and the talent paradox. Alibaba's AI division, centered on the Qwen large language model, has emerged as one of the most actively discussed development stories in the global AI landscape. Recent user growth metrics for Qwen's LLM have impressed analysts, with adoption curves suggesting that the product is achieving meaningful traction not merely within China's domestic market, but in international developer communities as well. The talent narrative cuts both ways. High profile hires from Google have energized the bull camp, interpreted as evidence that Alibaba can compete for world class AI research talent and that the QN roadmap has credibility among those who have built at the frontier. The incoming expertise in areas such as model architecture, training efficiency, and deployment infrastructure addresses known gaps in Alibaba's AI stack. Yet, the simultaneous reporting of notable talent departures has tempered unbridled optimism. When senior researchers or engineers leave a high stakes AI division, particularly in a competitive environment where rival labs are actively recruiting, it raises legitimate questions about internal culture, compensation parity with Western peers, and the strategic coherence of the AI roadmap under current leadership. Risk factors. China's growth target, and the geopolitical overhang. The macro backdrop for Alibaba is inseparable from China's broader economic trajectory. Beijing's updated growth target of 4.5 to 5% has been received with cautious optimism, an acknowledgement that the world's second largest economy is charting a path towards measured recovery, but one that still falls short of the growth rates that drove Alibaba's most explosive expansion years. More consequential for near term sentiment are the shifting geopolitical dynamics surrounding trade routes and cross border commerce. Alibaba's international businesses, including AliExpress and the Cainiao logistic network, are exposed to the granular mechanics of how global trade flows are reconfigured in a world of rising tariffs, decoupling narratives, and evolving US China relations. Any deterioration in trade corridor reliability is not merely a macro story, it directly impacts the unit economics of Alibaba's most promising international growth vectors.
Okay, you can always pause and read, or you can find the link in the description box below and read up. Okay, so the stock is up 2.42%. This is Friday, the 6th of March, 2026. Yesterday it lost 2.19%. This is its daily chart. Okay, the algos were expecting that it was going to be down today, but so far it is up. Okay, fascinating thing here is that this downward projection, it initiated on the, let's see when this was initiated. It was initiated on the 30th of January. It is still maintaining it, still reiterating it. It is 146.96. I pointed it out in the last video. So let's see. It might, who knows? It might retest it. As a matter of fact, the algos are saying that it might resume the uptrend from the 16th of March. Okay, who knows? It might go ahead and retest that. Let's see now. It's the probability of it retesting one, yeah, that price. Let's see, 146, 146, 146 is 146.96 is let's see, statistically very high, higher than 50%. Yes. Okay, let's see now. The stock is actually, what is it doing? Is it's consolidating? Okay, last time I we covered this, I was saying that it was still technically consolidating. Okay, maybe let's just say that it's now correcting. It's now correcting within a longer term bullish trend. Let's just say that it is now correcting within a longer term. Is it bullish? Let's see what we have, the 200 move, 200 move, 200-day moving average. Yeah, within a longer term bullish trend. Yes, yeah, it is correcting within that. Okay. Yeah, let's see now. The extrapolation of the 200-day moving average is expected to pick up momentum going all the way towards the 15th of April. Let's see whether they all align. Let's see whether all these moving averages align. Yeah, let's see. Let's have a look at the 30-day moving average, 40-day moving average. Let's see whether it aligns with the, yes, it aligns. Yeah, we have an alignment. We have an alignment. But the 200-day moving average is expected to begin to pick up its own strength from Monday the 9th, whereas the 200-day moving average, the 40-day moving average is expected to pick its own up from the 27th of March. But by then, they will all begin to sing from the same hymn sheet. So, but in the very short term, no, they don't align. But towards April, they begin to align. Let's have a look at the um, 10 and 21-day moving averages. There's no guarantee that these extrapolations will pan out like that. Yes, we have an alignment. The 10-day moving average is in alignment with the 200-day moving average, if anything. At least from the 11th of March, they begin to align. Let's see what we have on the. I can't really see what we have. Yeah, maybe at some point the 21-day moving average may begin to align, but all we can say is surely towards April they are all pointing to strong momentum by then. Maybe that the extrapolation we saw earlier on that is saying that a bounce might occur from the 16th may well be what may happen when we have extrapolations, clustering, falling on the same dates, the same numbers, the same prices. Then the chance of those extrapolations, panning out improves. It becomes, the probability of those happening increases. So let's have a look at the. Yes, it's saying that a bounce is expected from. Let's even say from next week, from the Friday the 13th. That's when it's saying that the bounce might pick up, and then going all the way towards the 16th of April. So let's just quickly glance at its weekly chart to see whether we have an alignment there as well. 6th of April, yeah, a bounce may have occurred. Yes, we do it. That's what we have. Yeah, yeah, that's what we have. That's what we have. Yes, towards yeah, much later in April. Yes, we have an alignment. Yes, we have an alignment. Yes, we have in terms of the extrapolation. Yes, in a very short term, what do we have? Come Monday the 16th. Yes, yeah, exactly what we have. We have Monday the 16th. It will be. Yes, we have an alignment. We have an alignment. Monday, the 16th of March. Yes, we have it printing. Yeah, it may have. Yes, that's when may begin to pivot. That's what we have here. Yes, yes. By the 23rd, it would have picked up. Yes, that's what we have, right? 23rd, it would have picked up. Yes, exactly. It would have picked up. Yes, exactly what we have. Yeah, exactly what we have. And then it's saying here by the 27th of March, it may have corrected. It may go into a correction. Is that what we have? 27th going towards, yeah, something like that. 27th is Friday. Then, yes, yes. It may have gone into a pivot by 30th, by the 30th of March. I think so. That's what we have. 30th is a Monday. That weekly chart prints every Monday. Yes, exactly what we have. Yes, we have an alignment. So there's a chance that this is what may happen if everything remains equal. If a lot of things can happen, a lot of things can change, can alter the direction of these extrapolations. These extrapolations are built from the order books. From the order books, this is the order books. How people have been trading the stock. That is how they come up. From the order books here. So see what you make of Alibaba stock, and thank you very much for watching this video.